I'm going to give you 6 compelling reasons to own stock in the Walt Disney Company. Coming up. Hey there, my name is Steven Spicer, and it's my goal to help you invest smarter. Now, if you missed the video we just released on the history of the Walt Disney Company, you should go check that out. It'll provide some helpful context for some of the points that I'll mention in this video. And if you're looking for my full investment report, well, stick around till the end and I'll let you know how you can get it all. Luckily, because Disney is so well known, I don't believe a detailed explanation of the company is necessary. The company is a conglomerate of media and entertainment assets, the most significant of which you are probably intimately familiar with. Officially, the company is divided into 4 segments: media networks, park experiences and consumer products, studio entertainment and direct-to-consumer, and international. And by the way, that's the new segment structure that they'll be using from here on out, starting in Q1 of 2019. Note the company's new emphasis on direct-to-consumer. That wasn't there before. That'll come up later. So they have their parks, they have their movies, they have their shows, they have their related merchandise. You get the picture. So let's get into the 6 reasons you might want to own stock in the Walt Disney Company. The first and least compelling reason, in my opinion, is the company's current valuation. I say it's the least compelling reason because I know there are better opportunities out there from a strict value perspective. But, especially for a blue chip, there's still a good case for it here. For example, Disney's price to free cash flow ratio is 17. Its price to operating cash flow is around 11, and its price to earnings ratio is 13. Now you can compare that last one to the S&P 500's price to earnings ratio of 17 and to its industry's PE of 25. So compared to the market as a whole, as a large, stable, blue chip company paying a roughly 1.6% dividend, it would appear fairly, if not slightly, undervalued. But when you compare it directly to its industry, and sure, it's not as young or nimble as some of the other companies in there, but it still seems quite a bit undervalued. Add to that a growth story or opportunity, and I think you'll find yourself questioning its current valuation. So let's explore a few of those growth opportunities over the next 3 points. So that brings us to the second reason you might want to consider owning Disney stock. And that's for its ambitious pipeline of theme park capital expenditures. Everyone in the developed world is familiar with Disney's theme parks, and since Disneyland opened in the 1950s, they've been able to realize a pretty steady rise in park attendance and in increases to their ticket prices. And although critics will point to an imminent economic downturn as a reason to discount this aspect of their business, the parks have been pretty resilient to that in the past. For example, the trough year of our most recent recession, 2009, was a record-breaking year for park attendance, even as the company continued to increase ticket prices according to its normal schedule. When you recognize that, and then study their park CapEx projects for the coming years, including the very near future openings of Star Wars and Marvel lands, it's hard to not see some long-term growth potential here. Now, the third compelling reason in a case for Disney right now is its box office lineup. In 2018, and most years these days, Disney owned the box office, capturing 26% of the US market share. And although the first quarter of 2019 is expected to lag that of Q1 last year, the rest of the year is jam-packed with potential blockbusters. Captain Marvel, the live-action Dumbo movie, Avengers Endgame, Aladdin, Toy Story 4, The Lion King, Frozen 2, and Star Wars Episode 9. It's hard to imagine it not being their best year ever. I'd be surprised. The fourth reason you might want to own stock in Disney is probably the one I'm most excited about, and definitely the one that's the subject of the most speculation. I'm talking about the company's venture into the world of direct-to-consumer video streaming. You know, like what Netflix does? They're calling it Disney Plus, and it's slated for the end of 2019. Now, I could probably make an entire video exploring all of the companies involved in this space and pontificate on what might happen next, and maybe I'll do that if there's enough of you asking for it. But at least for now, in this video, I'll try to keep it brief. There aren't too many large players in this space today. It's been dominated by Netflix for years, since they pretty much created the whole concept in the first place. Now they have about 140 million subscribers internationally, with about 60 million in the United States alone. Amazon also boasts a successful streaming service. And then there's Hulu, with its 25 million US-based subscribers. Now, Hulu is particularly relevant since after Disney completes its acquisition of Fox, remember we talked about that briefly in the last video, they'll own 60% of the company, of Hulu. It's also relevant as its subscriber base is growing rapidly, increasing its US-based subscribers in 2018 by about the same amount as Netflix, between 8 and 9 million. Now, I don't know what the future will hold for Hulu specifically, especially since Comcast, a bitter Disney rival, again, see our previous video, especially since Comcast owns 30% of Hulu. But there are a lot of things Disney could do with a platform like this. They've expressed interest in using their new Disney Plus platform for all their family-friendly programming, while using Hulu for programs with a broader appeal. But whatever happens, the fact that they'll soon be majority owners in a company that's growing at Netflix-like speeds in the largest media market in the world should not be discounted. That insight will surely prove a huge advantage as they move into this space. A couple other important things to note. Disney has already pulled all of its content from Netflix. In response, although they claim it was unrelated, Netflix dropped all of their original Marvel programming, including one of their most viewed shows, Daredevil. Netflix knows this is now a race for the best original content, and they've proven themselves capable. But so is Disney. And although Netflix is furiously cranking out new content, spending roughly $8 billion in 2018, Disney spent about $1.5 billion more than that, and was able to do so while paying a dividend to shareholders and maintaining positive cash flow. Now, add to that equation the fact that Fox last year also spent about $8 billion developing original entertainment content, while maintaining a dividend and consistent positive cash flows. And one starts to question more and more the sustainability of Netflix's consistent negative cash flow. Now, Disney's not the only company making this move in the near future. Apple and AT&T, for example, have also expressed similar intent. But in addition to the reasons I just mentioned, I believe my final 2 points for why I believe you might want to own Disney stock will drive home why I feel better about Disney's odds at least becoming a competitive rival, a close number 2 to Netflix. So the 5th reason you might want to own Disney stock is its unbeatable character intellectual property, IP. If you think about the cult followings of all the content they now own the rights to, it's not hard to picture millions upon millions of people flocking to their streaming service in a similar way that they flock to the box office. The Disney characters alone would be enough to make this point. It's difficult to imagine children not knowing about Mickey or Buzz or Elsa or, I don't know, what are your kids' favorites? Or better yet, what was your childhood favorite? There are so many, and Disney owns the rights to them all. All future movies, all future series, everything. But now you can add to that the entire Marvel Cinematic Universe once the Fox merger is complete. Think about all the opportunity there. And the entire Star Wars universe. Same. Maybe I'm alone here, but I wouldn't want to have to compete against any media company with an IP portfolio like that, let alone Disney with its significant resources and proven competent management. And that's my 6th reason you might want to own Disney stock. Their proven and competent management. Specifically, Bob Iger at the helm. He's had a great run at Disney over the last decade and a half, From a strictly stock return perspective, Disney stock outpaced the S&P 500 by around 3 times since he became CEO in 2005. Due to his success, he's been asked to extend his CEO contract several times. Most recently, this came up as a contingency for both boards, Disney and Fox, during their negotiations. Iger had to extend his contract from mid-2019 through year-end 2021 to see this merger through. So there you have it, 6 compelling reasons to own shares of Disney. Now, I have another video in this series coming out soon, so don't forget to subscribe. And if you'd like the full analysis of the most recent stock that I've covered, go to spicercapital.com/stock. Request it, and I'll just go ahead and send you everything over right now. Now it's your turn. What do you think about Disney? Where does it fit into your portfolio or on your watch list? Or does it not even make the cut altogether? Let us know in the comments. I look forward to getting to know you better and helping however I can. I wish you all the best. Take care.